Understanding appraisal contingency in real estate. Purpose: ensures the buyer is not obligated to proceed with the purchase if the property's appraised value is less than the offer price. Trigger: the clause is activated when the appraisal report shows the home's value is lower than the contract price. Outcome: allows the buyer to renegotiate, cancel the contract, or pay the difference out of pocket, depending on the agreement. Protects buyers from overpaying. Ensures the buyer doesn't pay more than the property is worth. Safeguards loan approval. Lenders typically won't finance more than the appraised value, so a contingency allows the buyer to address the gap. Appraisal process. After signing a contract, the lender orders a professional appraisal to determine the property's market value. Contingency period. The contract specifies a time frame, for example 14 days, for the appraisal to be completed. If the appraisal is low, renegotiate. The buyer can ask the seller to lower the price to match the appraisal. Pay the difference. The buyer can choose to pay the gap between the appraised value and the purchase price. Cancel the contract. If no agreement is reached, the buyer can back out without losing their earnest money. Contract price: $300, 000. Appraised value: $280,000. Options: buyer negotiates with the seller to reduce the price to $280,000. Buyer pays the $20,000 difference out of pocket. Buyer cancels the deal under the appraisal contingency. Market conditions. In a competitive market, some buyers waive the appraisal contingency to strengthen their offer, but this comes with risk. Negotiation. Sellers may be willing to reduce the price, split the difference, or offer other concessions. Earnest money. If the buyer cancels the contract due to a low appraisal within the contingency period, they typically retain their earnest money deposit. Offer a larger down payment. Reduces the loan-to-value ratio, which can make low appraisals less of a concern. Add a gap coverage clause. Agree to cover a specific amount above the appraised value, for example, up to $5,000. Risks. If the appraisal is low, the buyer must cover the difference or risk losing their earnest money. When to consider: when the buyer is confident in the property's value or has sufficient funds to cover potential gaps. An appraisal contingency is a valuable safeguard for buyers, ensuring they don't overpay for a property or encounter financing issues. If you're considering including or waiving this contingency, consult with your real estate agent or attorney to weigh the risks and benefits based on your financial situation and market conditions. For personalized guidance, please reach out. The award-winning realtor, Syed Firaz, at 470-269-0420 or email spherosrealestate@gmail.com.